Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors with Shaun, Burgess, Fixed Income Analyst and Portfolio Manager here on our Fixed Income desk. I need a Guinness desperately after this week. Happy St. Patrick's Day. Anyway, if I came on normally and said the NASDAQ was up 5.5% and the S&P eked out a 1% or 1.5% gain on the week, we'd say, oh, decent week. Let's keep this short, enjoy the weekend, and see what happens Monday.
Yep. Not this week.
Not today.
Not this week.
Not today, right?
Yep.
Banks. We've been on midweek with a video talking about custodian relationship within Cumberland and our custodians. Well received. We hope that was helpful. Since then, that was Tuesday. Since then, really a grind in the banks. Very difficult for anybody to pretend to have an answer to what may happen in the banking sector over the next week, month, quarter. And when banks are in trouble, it's difficult to think that the market can get its feet under it. So what we really need to see is that boil, that boil on the stove simmer. And the only thing that will help that is time. We need to see a day go by, 2 days go by, 3 days go by, a week with banks staying solvent. I'm obviously not talking about all banks, just talking about some of the banks that are in the headlines and making sure that no other banks get added.
You don't want to see an extension or contagion risk in any of this. You need to see it slow down.
There is real fear out there, and we see that in some of the cross asset class markets, right? Not just the fact that there's volatility intraday and day-to-day in the equity markets, but look at the bid in gold. Look at the bid in silver. I'll hand it over to you, Shaun. Look at the bid in Treasuries. I mean, there's nothing that shouts fear like those three areas domestically and the strength in the yen internationally. So, that's obviously a prime concern. Now, very often we see these kind of fear trades. They get people concerned, they get people very nervous, they get people emotional, and they peter out. We don't know where that's going, but tell us a little bit about some of the levels you saw versus a week ago or 10 days ago.
Yeah, we saw that the beginning part of this week where you had this big run into Treasuries off of fear, a little bit of a pullback. You get Credit Suisse in the news. What do you get? More fear trades. If we look back at the middle of last week, we had a 2-year at a 5%, north of a 5%, 508. That today sits at a 381.
Two-year Treasury bill was 5, just through 5, and it's 381.
381 today. That is a huge move. The 10-year was just about 4. That sits at around 334 today. So you're talking 120 basis points, 130 basis points on the 2-year Treasury, 60 basis points or so on the 10-year. Those are significant moves down from just last week, and it really paints a picture of how scared the market got off of seeing this instability in the banking sector and these few names, whether they're just pockets, but as you said, you don't know what else arises as you get some time away from the SVBs and the Credit Suisses of the world. And that's what you really want to see start to slow down so the market can digest just exactly what kind of help the sector is going to get and where things may play out in terms of those individual businesses.
Right, day to day there. Shaun, what about munis, for example? We got the fear trade in Treasuries. Yields dropped like a safe into the basement. What about munis? Any follow through muni yields?
A little bit in munis and other taxable assets. If you look at taxable munis in particular, little bit of a bid there, but not as much as Treasuries. Treasuries were really the winner on the week, which really tells you this is a fear trade.
Right.
And it's funny. We had a CPI and a PPI released this week, and it largely went unnoticed. CPI coming in at survey or in line, and PPI actually coming in below survey, which was good news if you're looking at inflation. And the Fed, we know, has a careful eye, a close eye on inflation, and their move next week is going to reflect their thoughts on where inflation is going and what we're seeing in the broader economy.
Right. So we'll have to buckle up. In terms of the portfolios, not a lot of activity this week. In US ETF, we did add on Thursday, added to the silver miners position. That caught a nice bid today, and did add a little piece in IJR, which is a small cap piece. Had really had outstanding performance through February and pulled back. Small add there. In terms of US ETF, we also added NASDAQ QQQ. So again, had a nice bid. We'll see where that travels next week. In terms of action, we have a Fed meeting.
Yeah.
You almost saw the last hour of trading today. Dow is down, let's call it 1%. Neither the bears nor the bulls wanted to make a move. For the last 2 hours, you just traded in a very narrow band because some things can go right here. We know what can go wrong. Some things can go right. You can have, as I said, that boil start to simmer if we get through a few days of headline news taking a back seat. So, Shaun, enjoy a Guinness.
Oh, I will after this week.
Get some rest, and we'll see you next week. Don't forget to like, comment, and subscribe so you can follow along with our weekly videos or our special alert videos that we had, for example, on Tuesday. Enjoy the weekend.